Best Ethereum ETFs of April 2026. Ranked and compared, Ethereum trades at $2,317.80. Today, minus 53% below its August 2025 peak, creating the widest ETH entry window in 18 months. Ethereum is the world's second largest cryptocurrency by market capitalization, a $233 billion network powering decentralized finance, NFTs, and an expanding ecosystem of real-world asset tokenization. By early 2026, 9 spot Ethereum ETFs trade on U.S. exchanges, attracting $12.94 billion in inflows in 2025 alone, a 120% AUM increase in a single year. 9 spot Ethereum ETFs now trade on U.S. exchanges, attracting $12.94 billion in inflows during 2025 alone, a 120% AUM increase, bringing total global AUM to approximately $18 to $19 billion. A spot Ethereum ETF is a regulated fund that holds actual ETFs, not futures contracts. When you buy a share, the fund custodian holds real Ethereum on your behalf, and the share price tracks the underlying ETH as closely as possible. The SEC and CFTC's March 17, 2026 joint ruling cleared staking inside Ethereum BlackRock's ETHB launched March 12, 2026, passes approximately 2.6% gross staking yield annually on top of ETH price exposure. Ethereum's proof-of-stake network rewards validators approximately 3.1 to 3.3% annually. Staking ETFs like ETHB pass the majority of those rewards to shareholders, creating a product with both ETH price exposure and a yield component. BlackRock launched the iShares staked Ethereum Trust ETHB on March 12, 2026, with $107 million in seed capital. The fund stakes 70 to 95% of its ETH holdings and 82% of gross staking rewards to investors. We rank and compare the leading U.S.-listed spot Ethereum ETFs by assets under management, expense ratio, staking yield, custodian, and investor suitability as of April 2026. Number 1. BlackRock iShares Ethereum Trust ETHA, the market leader with over $6.5 billion in a 0.25% expense ratio, Coinbase custody, and the tightest spreads of any Ethereum ETF, best for most investors. ETHA uses Coinbase custody for institutional-grade multi-signature cold storage. Its market-leading $6.5 billion in assets under management delivers the tightest bid-ask spreads of any ETF currently trading on U.S. exchanges. Number 2. Fidelity FETH $4 billion in a 0.25% fee, best for IRA and 401k integration. Number 3. BlackRock ETHB, 0.12% introductory fee, and 2.6% gross staking yield. ETH price exposure plus annual income. Number 4. VanEck ETHV, 0.20% expense ratio, Gemini custody, best low-cost, non-staking option. Number 5. Grayscale Ethereum Mini Trust, approximately $1.2 billion in a around 0.15% fee, the better Grayscale product. Warning: avoid Grayscale ETHE. Its 2.50% annual expense ratio is 10 times higher than ETH. $100,000 investment. That fee difference costs $2,250 per year, $22,500 over a decade before compounding. On a $100,000 investment, the difference between ETH 2.50% fee is $2,250 per year, minus $22,500 over a decade. Unless embedded capital gains lock you in, avoid ETH entirely. As of April 2026, Fidelity, Franklin Templeton Invesco, 2-1 shares, and VanEck ETHV pending staking amendments expected to clear regulatory review in Q2 2026, meaning staking features will soon be standard across the entire ETF category. Key advantages: no self-custody required, institutional-grade security, and staking yield up to 2.6% annually. Key disadvantage: expense ratios still compound over time, and no ETF share can be used in DeFi or on-chain applications. Choose ETHB inside a Roth IRA for maximum after-tax staking yield. Choose ETHA for the most liquid ETH price exposure. Choose FETH for 401k integration. Choose ETHV for modest fee savings. Avoid ETHE in all cases. UK investors use FCA, a regulated ETPs from 21 shares and Wisdom Tree on the London Stock Exchange. Canada's CI Galaxy ETHX charges 0.40% and is RRSP and TFSA compatible. In Australia, Global X and VanEck offer ASX-listed Ethereum ETF. For most investors, ETHA is the safest default market-leading AUM tightest spreads, 0.25% fee. FETH is the most practical for IRA, and 401k ETHB delivers 0.12% introductory fee plus 2.6% staking yield. Ethereum trades at $2,317.80 as of April 20, 2026, minus 53% below its August 2025 peak of nearly $5,000, creating the widest entry window for long-term investors in the past 80 months. ETHA is the safest default for most investors. FETH is best for IRA and 401k holders. ETHB at 0.12% introductory fee and 2.6% staking yield is the most compelling crypto ETF product available today. Avoid ETHE entirely.